What's going on, guys? It's Chris
and Charlie.
Hey, and welcome to our second video, Fusion Real Estate Investing video series. And today we're going to be talking about seller financing. It's a way of creating finance. I mean, you have, doesn't matter whether you're an entrepreneur or they fired you, it does not matter. You can still buy your next rental. We're going to be breaking down what it is, how to do it, and how it works. I know, Charles, you had experience with some seller finance. You want to kind of put a little, share with them a little bit of what you've done?
Yeah, so anybody out there can use seller financing or owner financing, get the owner, to hold the note. Mm-hmm. I've bought a couple properties like that also, and, I can't complain about it. I actually have a loan right now that is at 0% interest, and I only pay one payment per year.
Right.
That's it for 4 years, and then the loan's done.
Yeah,
so.
yeah. Now, for people, like, let's say, I'm sure there's people out there watching and wondering, like, Christian, okay, I see what you're saying, seller financing, but what is seller financing? And in very basic terms, what it is, it just means that the seller is going to become, quote unquote, the bank. He's going to finance, he might own the property free and clear, and maybe he doesn't want to sell for XYZ reason. To make it simple, it would be the same thing. So you can negotiate the down payment. Yep. You can negotiate if there is interest at all, and if there is, what's the percentage? What is the amortization? Right, it could be 20 years, 30 years, and what is the balloon term? And we're going to break this down, but just to give you an overall idea, you can negotiate all these terms, and obviously the sales price, right, which is the most important. It's very basic. It's just the seller is holding the note, and it's financing the property for you. That's in just on basic terms, but we're going to be breaking down actually one deal, and this is a real deal that I sent an offer. And I think it's going to give you it's going to give them a better idea on how to even negotiate, or what are the terms to negotiate when it comes to seller financing. So before that, now that you know what it is, maybe we can share a couple things. I know you mentioned that you have a property with 0% interest.
Yeah. Very interesting story.
Yeah.
I know I've told you before, just, so everybody out there can hear how easy it is to formulate a deal, and some people don't want a cash offer. So in this case, it was actually a 4-unit building. Mm-hmm. 3 of the 4 units had tenants in place. The building fully occupied brings in $2,000 per month. And the owner just happened to get a license to be a guide on a river. And he just no longer wanted to deal with the building. It was performing, but he just didn't want to have the everyday activities of, managing the property. So I went out to his property. He wanted to sell it to me for $65,000.
Okay.
So I got there. I had actually one piece of paper. Contract, but anyways, I pulled up there. He wanted to sell for $65,000. I noticed that the roof was going to need some work, and I told him, hey, I'm kind of concerned about this, and I offered him $60,000 cash. That's what I offered him. He told me 62. We have a deal. So we made a deal, 62,000. Well, here's where the story gets interesting. I never had this happen before until this deal. So basically, we were inside the title office. I had the private equity lined up. I was using, private funds. And he came up to me in the lobby, and he was like, Charlie, if you give me, all cash, the $62,000, he was like, I have to give the government half of this back.
Capital gain taxes, yeah.
Yes. So I was like, well, I have all the money lined up, the private funds. I was like, I kind of want to move forward from there. He was like, this is in the lobby of closing. He's like, well, Charlie, if I knock $5,000 off the price and hold a note, will you do that? So I was like, okay, you have my attention now. So what he originally wanted was one payment per year of $12,000, 0% interest. But I told him I couldn't do that, being that I was only going to pay the bank $600 per month after I refinanced out the money.
Right.
So that's more than $12,000.
Well, yeah.
That's less than $12,000, that's what he wanted. So anyways, we settled to a price of it was $5,000 off of 62, so I think that puts at $57,000, 0% interest, and I pay him one payment per year, of $7,200 at 0% interest until it's completely paid off. And you know, it worked out for him. It worked out well for me, and I don't know. That's owner financing from up here, and then there's other little parts that need
and
to
it's
happen.
all the terms, and you know that's just one way. But I think that's the best case scenario. Like you pay 0% interest.
Yep.
That's
Which
amazing.
He brought that up. It wasn't like I said, "Hey, I want you to give me the money at 0%."
Right, and I think that's kind of the motivation, right? It varies and it changes depending on what the seller situation is. Some of them might be really scared of paying that capital gain tax. It might be a big chunk of it.
So what I think the biggest difference in this deal, because you know I've approached other people for owner financing. First of all, we were in the lobby of the title company.
Oh, okay.
You know, so, and then second of all, I was basically telling him, hey, I'm really not interested because I already have the cash lined up. The deed was already written up.
So there was some pressure there. Some pressure.
Everything was already written up. So I guess he was thinking, hey, if I say 0%, there's no way he can say no.
I think that's pretty cool.
Right.
That's pretty cool. It's part of the negotiation where like you had your way, you had leverage there.
Yeah.
Okay. Before anything, I think before that video, we wanted to answer all your questions you have, guys. So we got creative here. We got creative here. So this is my cell phone number. You can call me right now, and we're going to answer all your questions you have for the next 20 minutes. Okay, so if you have any questions, maybe you have a deal going on, or maybe you are interested in kind of diving into any specific terms, give us a call. I hope you guys can see this number, and I'll have my phone right next to me. So if you guys have a question, make sure you call, and I will know that you're calling here. We're gonna answer your phone call, so everybody can learn.
Yep. I'll let you come and dive into your next things.
Okay.
I'll share it out.
Okay,
here
cool.
Real quick.
So when we talk about seller financing, right? You say, okay, Christian, yes, I can understand the seller's gonna finance the property. I don't have to go to the bank. That's phenomenal. But how do I find these sellers? Okay, does every seller want to do this? No. Can every seller do it? No. You actually have to find out whether, number one, the seller is able to do it. And to answer that question, in general, if the owner has held the property for 20, 30 years, it means that he paid the mortgage off. So he owns the property free and clear. Okay, that means that he can actually hold a note. He can act as the bank, and you can give him maybe 5% or 0% or 10%, whichever you negotiate. And you can own the property, you can hold the property for X amount of years, which is called a balloon term, right? So that's an idea. So how do you find these sellers, right? So just to give you an idea, when we're dealing with seller financing, most sellers that I've dealt personally, because I have 2 properties with seller financing, and in most cases, what's happening is that they're about 55, 65, 70, or 75. They're about to retire. Now, you got to keep in mind why, okay? Because when you're 75, you're either going to sell your properties or you're going to give it to your kids. There's no way you can take it to the grave, right? So
that's correct.
So you have to know that your target group, if you're looking to do seller financing, it's probably going to be people under 50, 60, 70s, because they're about to sell, and they're going to leave it to their kids, or they're going to sell it. And if they're going to sell it, you want to be in front of them, and you want to say, hey, Mr. Seller, you've owned this property for 20, 30 years. I'll tell you this, why don't you finance the property to me, and I will give you 5% down. This is an example. I'll give you 5% down, and I will pay you $300 a month for 5 years. and at the end of those 5 years, I'm gonna pay the remainder of the loan. Either I'm gonna grab some cash and pay you, or I'm gonna refi with another bank and pay you off. That's basically what it means. Now, why is it beneficial? Number one, you don't need to have a 750 or more on your credit score. You don't need a great credit score. You don't need a credit score there. Number two, in some cases, if the seller is motivated enough, you don't need much of a down payment. And also, you can negotiate the interest rate way below what the actual bank would give you. Like in this case, Charles got a 0%.
0%.
Okay, the other benefit to that is, again, the monthly payment could be much lower than if you were to go to a traditional bank.
Or you could pay a higher interest rate than what the market bears, and that may...
Correct.
You know, the person may
so the whole point of
that.
seller financing is, number one, you can buy a property, okay? You can buy a property without going to the bank with better terms than the bank, okay? And the whole point is that the less your monthly mortgage is, the more your cash flow you're going to get at the end of the month. So that's great. At the end of the day, it's how you structure the deal, you know, because most sellers they care about, okay, I want this as a sales price, and I want this down payment. But I would say 8 times out of 10, in my experience, the sellers are sensitive on the sales price and on the balloon term. Because look, if I'm 75 years old, okay, I'm not gonna hold a note for 20 years because I will be 95 by the time you pay me off, and I might die. You know, I mean, it's the truth.
Yeah.
So some of them, they just want to hold for 2 years or 5 years. I've seen all the way to 10 years, but it really depends on you know, on the age of the owner, on the motivation of the owner,
their
finances. So that's just to give you an idea. I think the best thing to do now is to do the breakdown of the deal. You want to go ahead and I'll follow along, and if you want to add some things, Charles, you can. Let me see. If somebody calls, just let me know, okay?
Alrighty.
All right. So I don't know if they can see this though. Let me take. Where's the pen or the marker? Okay, there we go. Okay, really quick here. Can you guys see it? Good. All right. Can I start from here or here? Let me see if you guys can take a look at this. We're gonna do the following, okay? So this is the sales price. The sales price here is gonna be $55,000, okay? And then you have your down payment. Again, that's a variable you can negotiate, okay? Now, if you're gonna do the down payment of and let's say you negotiate, you only have 10%, okay? What is 10% of 55,000? Is $5,500, okay? So that is gonna be what you need to bring to the closing table, okay? And then the third thing you wanna look at is, okay, what is gonna be my mortgage, right? And how can I negotiate that with the seller? Well, when you're dealing with your mortgage, you wanna find out, okay, what is the loan term, right? What is the loan term? You want to know what's the interest rate and what's the amortization. So the first thing we're going to do is, if you're saying, Mr. Seller, I want to buy that property, but I will pay you $55,000, and I will give you 10%, okay, 10% down, and you're going to finance, okay, the seller is going to finance the other 90%, which is going to be $49,500, okay. Now, but the seller is going to ask you, okay, I can hold the note of $49,500, but how are you going to pay me? What's going to be my mortgage payment? And then you're going to say, what's going to be your mortgage payment? So basically, you can negotiate and say, okay, I'm going to pay you 3% interest amortized over, in this case, the example that I'm doing is over 30 years, okay? And if you put this on a calculator, which I can tell you, which calculator do you use, Charles?
I just Google mortgage calculator.
Okay, so there is one, you guys, it's called Carl's Mortgage Calculator, and if you put this, the sales price, the down payment, the interest rate, and amortization, you can get the mortgage payment, okay? You can do a quick Google, you can Google really quickly and you'll find it. Now this would be $208.69, okay? That's your mortgage, your monthly mortgage. And your yearly mortgage, okay, because that's important, is going to be $2,504.28, okay? Now, so you're saying the following. You're telling the seller, hey, look, I'm going to buy it for $55,000. I'm going to go to closing and put 10%, Okay, and you're gonna finance the rest, which is 49,500, and I'm gonna be paying you 208.69 cents. Now keep this in mind. This right here will rent for about $800. Okay, so what's the income? Okay, so the income here, what's 800 times 12, Charles? Figure that out real quick. I was never sharp in math, so
9,600.
Okay, so it's 9,600. Okay, 9,600. Now you are gonna make 9,600 grossly, right? You're gonna make a gross income of $9,600 a year. You're gonna pay your yearly debt service is gonna be $2,504.28. But we're forgetting a variable. Okay, to hold this investment is gonna cost you taxes, insurance, perhaps water, trash, and sewer. Now, let's say that 25% of the grossly year income is going to be your expenses. So, Charles, could you do me a favor? What is 25% of 9,600? So we're going to call that operating expenses, okay?
2,400.
Okay, give me 1 second. Okay, so what is it?
2,400.
2,400? All right. So that's your operating expenses. So now what you're going to do is you're going to subtract what you're making every year minus the operating expenses to have that investment, and then your yearly debt service that you're paying the seller, aka the bank, and that's what we call yearly cash flow. Okay, so Charles, what is 9,600 minus 2,400?
7,200.
Okay, minus 2,504.28.
504.
Yeah.
And 28 cents.
28 cents. Okay, so what is it?
4,695.72.
Okay, could you repeat that?
4,695.
Yep.
And 72 cents.
Okay. All right. So let's do this really quick so you guys can understand. Really quick. Seller, Mr. Seller, I'm gonna pay for your property $55,000. But I don't want to go to the bank. I think you're in a position where you can finance the property. Would you finance the property? He says yes. He's going to ask, okay, but what is going to be the terms? How much money are you going to? How much are you going to pay me for? How many years? And you say, okay, Mr. Seller, you know what? I can give you 10%, which is $5,500, and the rest you're going to finance, which is a loan of $49,500, and I'm going to pay you $208.69. I'm going to do that for, let's say, 5 years. And at the end of those 5 years, I'm going to pay the remainder of the loan. Okay? So, in a nutshell, that investment is going to provide you with $9,600 overall, grossly. And then you figure your operating expenses. In this case, it's going to be $2,400, right? And then your yearly debt service that you pay the seller, aka the bank, $2,504.28. You subtract those two from the yearly income, and we come for a cash flow, yearly cash flow of $4,695.72. That's your return on your money. So let's figure out what was your initial investment capital. Okay, so we said that we're gonna do $5,500, which is 10%. Now, when it comes to closing, your closing costs are going to be anywhere from 3% to 5%. In this case, let's play conservative. What is 5% of $55,000? Which is 5% of the sales price, by the way. Okay, that's
$2,750.
Okay, $2,750. Now, what is $2,750 plus $5,500? Let's do it here.
$8,250.
$8,250. So $8,250 is what you're going to have a closing to buy this investment that's going to produce you $4,695.72 a year, assuming you don't have any major renovations to do, any major expenses, and that's a whole different part about how to buy the right investment. Assuming you did your due diligence, you're buying a really nice property, a decent property, that the tenant has been there for a long time, pays on time. We're talking about ideal case here, okay? So, Charles, let's find our return. What is $4,695.72? 4,695 and 70.72.
Yep.
Divided by our initial investment capital to buy this rental, which is 8,250.
0.56.
Okay, this is the ideal case, right? So you are getting about 56% return, assuming you don't have any major expenses. Now, let's say that instead of 56, that's 30%. Let's say worst case is 20%. Isn't that a lot more than what the bank is giving you, which is like 0.03%,
Yep.
or what the CD is giving you, which is 3%, but you have to hold your money for 2 years?
And no credit check.
No credit check, right? No credit check, no income check. I mean,
No personal
financial statement or anything. So anybody that's watching right now can purchase this property, okay? And believe me, there's a couple properties in the market right now. If you're interested, reach out to me. So all you need is $8,250 to buy an investment that's going to produce you $4,695.72. Okay, I hope you guys understood a couple things, the variables and the terms. So just to recap, you can negotiate the sales price, the down payment, right, the mortgage payment, the balloon term, and yeah, I mean, those are the basic, the most general terms you can negotiate and get a good deal. Maybe you tell him, hey, instead of 55, I'm going to pay you 45, but I'm going to put 30% down, so there's less risk for you. Or, you know what, give it to me for 50. I'll still give you 10%, but instead of 3% interest, now it's 0.
Or I'll give you 7% interest and only $2,000 down.
Right. I mean, it all depends where you're at. If you have the money for a down payment, great. If you don't, then delete the down payment and maybe give him a higher sales price, because maybe 2 years down the road.
Or more interest.
Right, because maybe right now you don't have the credit, maybe you don't have the financing, but 2, 3, 5 years from now you're going to have it.
Yep.
So you can do a balloon term of 5 years. So you can go to the bank later. The whole point is anybody can have a rental right now. Anybody. Doesn't matter. All you need to have is $5,500 or nothing, really. If you negotiate the right deal, you can come in with no money down. I hope you guys understood. Just a little example. And it's all over the place, but I'm sure a couple of you guys are thinking and maybe realizing that there's other opportunities in the marketplace.
Yep.
Other than that, what else do we have, Charles? What do you want to add to this?
I think you covered it pretty well. It's really that simple. You just need to negotiate back and forth, with the owner, find out what motivates them. Is it the higher interest rate? Is that what they're looking for? Then angle it that way. Are they looking for a shorter term? Then, maybe push down the sales price. Do they want that high sales price, but they're willing to hold the paper for 10 or 20 years? Then take it that way. You just need to find out what the other side wants. You need to just make it a win-win deal. Make sure it works for yourself also, but make sure it works for them. And as long as you guys can meet in the middle, that's how you make a real estate deal happen.
Absolutely. And I'll tell you something. I tell all my clients and really everybody that I talked about real estate is, you have to become a detective. You have to be a master of due diligence when it comes to real estate. Because here's the thing. If there's a seller and the seller is, you got to research, okay, how old is the seller? How many years has he owned the property? Okay, what is his motivation? And let's say an example. Let's say the seller is 79 years old, right? And he owns multiple other properties. So what can you assume from that? Is number one, this seller, might want, he's motivated to finance it because he doesn't want to pay the capital gain taxes.
So the biggest thing that I would think of if that was an owner is they're probably, they know what owner financing is. So they're not going to, it's not going to be that hard to try to explain it to them because they own multiple properties and they've probably bought some of those properties using owner finance. So it's, they're going to know exactly what you're talking about.
Absolutely. And I think that you bring a great point when it comes to that is you have to, again, be a detective due diligence and find out the other parties, what's their position and are they aware, or if they're not aware, how can I educate this person in the right direction? I think we have a couple questions here. Let's take a look. I know some of you guys are a little shy to call, but you're more than welcome to call that number, or we can answer your text.
Do I need a lawyer to do that contract, or can I do it myself? So basically, that's what Mark had asked. In my case, I got the note, everything written up that you need. Don't you? You have
Oh
the paperwork
yeah.
there?
Okay, so here's the thing.
You
Here's
want
the
me
thing,
to-
guys. Yeah,
I'll go ahead and explain some of these parts, and I'll just tell you guys exactly what I did, and maybe Christian did it different. In my case, basically, I brought the owner. It was the owner and myself right into the title office, the closing company, and we just told her exactly what we wanted the terms to be. And they drew up all the paperwork there, and that's how we took care of our transaction.
And just to answer a couple questions, so Whitney said, is it worth to pay a higher interest rate through seller financing? Great question. Now, it all depends on the other terms. Now, would I pay 5-6% on on a deal if the deal makes sense, meaning the sales price is really low, and I'm like, okay, in 2-3 years I'll pay it off anyways, right? I can go to the bank in 2 years and get a refinancing and get a lower interest rate. At that point, it makes sense. Yeah. But if you're paying top full price, and why overpay if you can negotiate the interest rate? But to answer your question is, yes, sometimes it makes sense.
Or you could do something like this. Say, you want to pay for that property, let's say $45,000.
Right.
You want to bring it down $10,000.
Yep.
Offer to pay them 3 years interest only.
Right.
At 10%.
Right.
So then you're not paying principal.
Yes. So that's
there's a whole bunch of different.
Yeah, and obviously sellers love that, right? But it all depends. See, in my experience, sellers are very sensitive to the sales price. Yeah. But they're not too sensitive on the mortgage payments. So this is excellent for somebody that right now doesn't have the credit, doesn't have much down payment, doesn't have the income or the proof of income in the past 2 years. Anybody can buy with seller financing, and I think it's a beautiful thing. So what else are we doing? Mark, do I need a lawyer to contract with myself? Well, there's documents that you need to have, but I mean, you can. I've always done it with the title company, and the title company handles that. Now, I have two things right here, and I think Charles, you can explain since I.
So basically, to what you need to legally get done in your title company or closing company or your closing attorney can do this for you. You want to get a commercial note or a promissory note written up. That's what this is here. This one's several pages long, but again, you just need to tell your expert. That's why you need to build your team. Go to a closing company, title company, and say, hey, these are the terms, and that's basically what your promissory note is. It says how much you're going to pay for the property,
the interest rate,
and how much you're paid per month. All that's in here.
It's basically what we have here. It's a lot of pages legally explaining these terms.
Correct.
That's all it is. I mean, that's all it is. It's just saying the interest, extension, late fees, blah, 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 la, 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 la. It's just this, okay? It's just, what's my down payment, what's my interest rate, what's my sales price? It's saying, I, Cristhian Huamani, will make these payments, or if I don't make, and I have a late, I have to pay this fee, etc., etc. Yeah. And the second thing you want to explain.
Second thing then would be deed of trust that, secures their position. Basically, a lien on the property is pretty much what it is, which says, this is how much money I have to pay this person. And, that deed of trust will not be released off the property until you pay them all that money. So that's how they can feel comfortable in the transaction to know that their money that they want is attached to the property is basically what your deed of trust says.
Yeah, that's absolutely.
It says in a whole bunch of different real long words.
Yeah, you know how legality and law is.
That's basically what it says.
Yeah, it's protection for the seller, and these are the terms that we just described. So that's basically what it is. I mean, in most cases, how do you find, I think a lot of people are probably asking themselves, Cristhian, whoa, I can buy properties without having great credit, without having down payment. Is that real? Yeah. It is real, but now they're asking themselves, how the fuck do I find them?
Well,
right?
so, that's what they are asking themselves.
How do I find them?
Yeah, so what I'll say is if everybody's seeing this video, that's how I found my last owner finance deal. This guy, I want to say he was in his 60s. I shared a Facebook video. He seen it. He
Right.
said, "Hey, do you buy apartments? I seen that you did a video that says that you buy houses."
Yeah.
I was like, "Yeah, I buy apartments." So I spent no money on marketing.
Yeah.
It was a free video that I shot, that I shared across on Facebook. He reached out to me. I went there, owner finance deal. So I got exactly what Cristhian just broke down here from a Facebook video. That's how you find it. It's that easy. Now there's a whole bunch of other different things
And
that
I can
you can do.
yeah, I can do. So that's one way, right? Facebook marketing, great.
Yeah.
The other way to do it, let's say you're not great with video, you don't do Facebook marketing, you're straight up with the real estate agent, right? Number one, you want to find a real estate agent that deals with sellers and investors in the marketplace that, number one, buy and hold. And if the real estate agent owns properties, he probably knows people,
That
right?
could be. They could call that number.
You can call it.
agent.
Hey, if you own a property, you want to do some sell, just give me a call, right?
Yeah.
So basically, I mean, anybody can do it. If you go into the MLS, you work with an agent that specializes in multi-unit apartment buildings or in investment properties. That guy or girl knows exactly what, who the buyers, who the big players, the sellers are, in town.
Yeah.
So they stumble upon seller financing deals every once in a while. Like see what I do as a real estate agent that specializes what I do. And if you're an agent right now, you're watching, you probably got one of my emails. I send every property in the marketplace. I send an email to every single property in the marketplace, to every agent, and ask, hey, is your client open for a seller financing, through a short-term loan? So could he hold some financing? And then I get 6, 7 out of 10. They're like, no, sorry, no. But there's always 3 out of 10 that are saying, well, what are the terms that you're talking about? And that's when you go in, boom, you show the terms. If it's a win-win, you negotiate and you get it done. Okay, like right now I'm helping 2 people right now get some seller financing deals. All they have to bring is just $5,500, some of them $6,500, but we can get it done. It's a win-win. I'll tell you an example. So a seller bought it very cheap. Okay, he or she renovated a property, has held it for 2-3 years. Maybe changed the ideas. Now she wants to do something else, buy different properties, maybe commercial, right? Yeah. So now she wants to sell. Now she owns all the properties, let's say, or he owns the property free and clear. And he or she understands, he or she's an investor. Yep. So she's okay, or he's okay holding a note, as long as the sales price makes sense to her, so she makes more money or he makes more money.
They may want to get into the lending side.
Right. So here's the thing. If you are working with an agent, make sure you're working with somebody that's in the marketplace, boots in the ground, in that environment, specializing in that. Okay, that's number one. Or number two, do Facebook videos. Hey, do you own real estate? Do you want to finance it for me? Yeah. And if that's the case, then, pitch your terms and get something done. The other thing that you can do is, you can go straight up yellow letters, right? You can do perhaps mailings, cold calling, anything. You just have to be in front of these people, in front of these sellers that have owned this property for multiple years and are ready to unload, are ready to sell. And believe me, if you get every owner that is from 65 or older and they own a portfolio of real estate, they are more likely going to sell in the next year, 2 years, 5 years. They're either going to sell it to their kids or they're going to, sell it to people or leave it to their kids, right? Yeah. So your job is to be in front of them, pitch your terms so you have your first rental and you can build your portfolio that way. You don't need to have great credit or any down payment if you negotiate right. Anybody can do this. Yeah. You just have to find these deals. And other than that,
the deals are out there.
The deals are out there.
Basically, the deals are out there. These kind of deals, you can find them. They're going to come. It's not like they're not out there, or it's like something that happens, every now and then. Like you said, you're working 2 or 3 deals right now. They're just out there. You got to go out there, look for them, set them up, make sure they work, and just get it done. It's all about taking action.
That's right. Now, we got a question here from Cristhian. He says, is it easier to get seller financing deals through an investor over a regular homeowner? Great question. In my experience, I think it's easier if you're dealing with an investor because that investor have probably bought properties through seller financing too. Like heck, I have some properties. I have one property actually that I own free and clear. It's a small single family home. If somebody pays me the right price, I can do it. I will finance it to somebody. Well, we'll talk about it. So, but let's say about it, and I'm all in for $35K.
Yeah.
If it's in its value right now, 55.
Okay.
Somebody gives me, 55, and the mortgage makes sense to me. Hell, I'll hold it to
I was
than that.
65.
Huh?
I was thinking 65.
Well, I can do 65 too. Actually, that could work too. But I'm trying to get a high mortgage payment, so that could be one of the reasons why I want it to be fair.
Yeah.
But I mean, if they give me a lower down payment but a higher sales price, I'm all in.
Yeah.
It all depends on the balloon terms and all those variables that we talked to. So to answer your question, I think it's easier. What do you think, Charles?
I'll second that. I think it is easier to get owner finance deals from investors or maybe somebody that's owned multiple properties, just because they've probably used that tool, owner financing, to acquire some of the properties, just because they're familiar with what exactly it is. One other question on there too. Jeff Miles says, what motivates somebody 65 plus to sell the property?
You want to answer that question?
What motivates them? They're just looking to do something else with their life. They just, in the case of the deal that I got, he just didn't feel like doing the everyday, property upkeep and things like that. He just wanted to go out on a boat on the river and enjoy the rest of his time.
And also one thing, okay, just to answer your question, look, how many 65, 75-year-old do you see that is currently actively buying rentals? Not a lot. It's a minority. Now, most people that are 75, they've been doing real estate investing, let's say, for the past 20, 30, 40 years. Picture Charles 40 years from now, or me 25 years from now. I'm probably going to own multiple properties free and clear. You're also. And at that point, again, it's just a phase. Everybody, every investor is always at a phase where he will either sell or leave it to their kids. I mean, there's no other way.
And
there's no other way.
You hit a good point there. Some of these people that have kids that they could, pass their properties down, some of these kids don't want the properties. So then they're stuck in a position of, how am I getting rid of this property? Do I want all cash and pay taxes? Or do I want to trust in somebody that they can make that monthly payment so I can still continue to get income and not have to pay that big tax bill? So you're come across that also.
And I can personally tell everybody that I've actually targeted, like my marketing efforts in the past year have been strictly for investors that are in the 55 plus, 65 plus category, because they are the ones I'm serving. I'm servicing people in that category because there is a need. And I think people, like you say, sometimes as much as the father wants to leave that, invest those investments to their kids, the kids don't want to deal with, maybe they don't like the business. And then they got to sell. Your job is to find those people and help them, right? So that there is a gap there that you got to find and service. And I think that's a great win-win, because I or he or anybody, even you, without having great credit, no down payment money, you can get a rental and increase your income by $3,000, $4,000, $5,000 a year per deal. Okay, if you make $350 a month, that's what, $4,000 plus a year. Now imagine if you find 5 deals a year, because it's possible. Imagine if you find 2. You're adding $10K to your income every year.
All without going to the bank.
All without going to the bank. Now, eventually, with the balloon term, maybe in the next 3, 5, 10 years, you're going to have to pay it off. But you made your money, and you can go to the bank later down the road. This is so perfect for people that don't have down payment, have bad credit, because it gives them time. It enables them to get a better credit throughout. To save up for a down payment, to do whatever, but you got started. A lot of people struggle on getting started because they can't go the traditional way, which is going to the bank. But you can always rely on this seller financing, because it is a great opportunity, especially for people that are young, 20s and 30s. I mean, I tell everybody, so you can leverage it. Time is gonna pass, man. Doesn't care about when I'm 75 years old, I'm gonna have backaches, my stomach is gonna hurt, my jaw, my teeth are gonna be gone. But one thing is for sure, if I make those decisions now, I'm not gonna have financial aches. Okay, and that's something that you guys can decide for yourself. I think it's a great opportunity. If you want to find out more, you can reach out to me or to Charles. If you're investing in Hagerstown and you want a real estate agent to help you, by all means, I'm more than happy to help you. Or if you want a turnkey deal, Billwood Properties can also help you find great turnkey deals. I think that's one of the reasons why we're doing this is to educate you so you're confident and comfortable to make that decision.
Or another thing out there, you may say, hey, this is great, I can set the deal up, but I just don't want to deal with the tenants. That's fine. We also do property management, so you can have people in those markets doing jobs that you do not want to do. So don't let that stop you either. Set the deal up. You can have somebody else put the tenant in the property. You can have somebody else collect the rent. You can have somebody else do the repairs. Just have all the experts in every single position. Your lawyers, your title work, your property management, financing, all that. Just get it together. You don't have to do every single little thing.
And I have 3 deals right now that could potentially go that way. So reach out to me if you're very interested in it. Other than that, we want to invite you to our upcoming meetup. It's the first Saturday of every month at noon at Bulls and Bears. We're going to have a great lunch of food. It's great. It's not free, but it's great. And you guys can come in, learn a little bit more about seller financing, perhaps hard money lending. I think this upcoming meeting, we're probably going to kind of educate people and kind of share a little bit about hard money lending. I think there's a couple questions that some members asked. And I think we're going to be talking a little bit about that. So you're more than welcome to come. It's free. You guys can come in and have a great time. We're a group of 12 to 15 people, so it's not a huge group of 100 people. So it's more like you can communicate easily and share your thoughts and any questions and concerns you have. I think we had a pretty good information for them, so you guys can digest a little bit and ask questions on Facebook, and we can answer them in the next video series. Okay.
Oh yeah, so video series will be now. It was Thursday, but we had to change the dates up just because there's a lot of different networking that we do. And there's a lot of just business that we got to do besides being in front of camera.
That's right.
But so what we will be having this show will be every Wednesday at 7:30 p.m. So it's every Wednesday 7:30 p.m. We'll be here.
Yes, and again, if you are a beginner and you want to get your questions answered live here, right here, we want to invite you. No, actually, if you want to be here or come, either call, Facebook, ask your questions on Facebook, and you can physically come. If you're in the Hagerstown market, we want to have you here, and we're going to answer every little question you have so other people can learn also. And if you're an expert in your field, whether it be in Washington, D.C., Baltimore, all the way, in Northern Virginia, whether you buy and hold or you're doing, 100 flips a year, we want you to come here. And if you can't come physically, we want to have you live. We want your expertise. We want to share with people what you know, so they can find out what you do and, how it can be a win-win for you and them. So I think that wraps up our show.
That is.
Thank you very much for showing up, guys. We really appreciate it.
Thank you.
See you. Take care.